क्या हाल चाल सत श्री अकाल. This is Romit again and we are going to learn working management का only concept. Okay, so first gross working capital, it is just current assets, and net working capital is current assets minus current liability. Okay, this is a simple thing. And to find out working capital, there are two methods. Okay, the first one is working capital cycle method, the other one is component wise or the quantitative estimation method. So operating cycle method na simple. So R plus W plus F plus D minus C. Okay, remember this formula and we'll go it deeply. So when it comes to raw material, average raw material divided by consumption. Average raw material divided by annual raw material consumption. Okay, annual. And when it comes to working capital, average divided by cost of production. And when it comes to finished good, it is finished average stock of finished good divided by cost of goods sold. And when it comes to receivables, it is receivables divided by annual credit sale. And when it comes to credit period, it is payables divided by credit purchases. Remember, when it comes to raw material, it is raw material by consumption, and when it comes to work in progress, it is progress divided by cost of production. And when it comes to finished good, it is cost of goods sold. When it comes to receivable, it is credit sale, that is whatever we are going to get. And when it comes to credit period, it is credit purchases. So only thing we are going to subtract is the credit period we have found, and other thing we are going to add. So after this, so operating cost, it will be given in the question. So divided by 365 into operating cycle period plus desired cash if they have given. So you will get the estimated working capital. And if you did not find it, operating capital annual operating cost divided by number of operating cycle in a year. So this we found out by operating period divided by 360. Okay, this is this one plus desired cash if we have given, you'll get estimated working capital. And the second one is component wise. Here simple thing, the current assets minus current liability. The current assets is first one raw material, work in progress, material, labor and overhead will come, and finished goods will come, debtors, if anything is prepaid, expenses, sorry, what is this, prepaid expenses kind of, and cash and balance, and the current assets. And when it comes to liability, first liability will come, and outstanding labor, overhead and other current liability. Okay, so if they provide any, like if they say maintain some 10% for safety margin and all, take safety margin, done. Total and cash cost approach, study this, aren't that important. I mean important, but you've already studied this, nothing to learn. So depreciation cannot be outstanding, so debtors can be valued cost of credit sales, and depreciation and profit will be fully ignored when it comes to cash cost approach, because seriously bro, cash cost depreciation sambandhane illa. And the next one is like in case of work in progress ka completion na, so they say that when it comes to material it is always 100%, when it comes to labor it is 50, and when it comes to overhead it is 50. Like nothing is given, we have to assume this. Okay, simple. If nothing is specified in the question, go for total approach. And this one is like existing and a new company area, this one even kids know. And in case of new company, like raw material consumed plus closing stock is the purchase. Okay, matlab there is no opening stock. No, if it is opening stock, we would have minus here. Done. And this one, see, even you know this, but I'll tell you once again. So if production double hua to the impact will also be double. And when it comes to variable cost increase, what it will change, but when it comes to fixed cost, it won't change. Raw material, it will be double. VIP, work in progress, it won't change. Okay, so understand this. Wait, it won't change. Okay, there is a reason given, I have discussed in questions. Fixed cost, it will change. Sorry, fixed goods, it will change. Debtors, it will change. Prepaid variable, it will change. Fixed, there will be no change. Creditors, there will change. Others, it will change. And outstanding fixed cost, it won't change. We are done with introduction. Okay, then it comes to receivables. So in receivables, total approach, credit. So whatever benefit you are going to get is will increase the sale. So receivables and payables, and whatever the cost is like BCDO, that is bad debts, collection cost, discount and opportunity cost. Okay, so this is statement showing net benefit, sales minus cost, that is variable and fixed, and minus you have to do bad debts, collection and expense, like discount, you will get PBT, that decrease tax, and last is opportunity cost. So till this much now you will do. Only opportunity cost will be the headache, I mean kind of difficult. you'll do it. Okay, so this is what they have told before itself. You're going to get sales इसमें variable and fixed cost you're going to get minus, then bad debts and cost of administration, that is what I have told, that is collection expense and discount. And then later it is before tax done, so they did not take that down seriously. This is sales is price minus quantity sold. This and all even kids know. This one even kids know. Bad debts, it is calculation of percentage of sale. Collection expense, it is always given in the question. Cash discount, this they say 2 by 10%. So 2 is a percentage. If you pay amount in 10 days, you'll get 2% wala discount, and the total amount is 30. Total days is 30. Normally you have to pay in 30 days, but if you pay in 10 days, now you'll get 2% wala discount. Clear. So this is what I have done. And if collection period is not given, na, simple. So for like above example itself, they'll say 80% have opted and 20% have not opted. In that case, 10 into 80%, that is 8, and 30 into 20%, that is 6. So 14 days is the collection period. Done. Opportunity cost, bro, this is important. Okay, opportunity cost, what I've told you here. So see, bad debts, 1% in sales, something will be given. Collection expense will be given in the question. Discount also they have given like 2%. We have already stored 2 by 10 like that. And the last one is opportunity cost. The opportunity cost formula is this one. Okay, so it is simply variable cost plus fixed cost divided by ACP. ACP is average collection period. Okay, divided by 365 when it comes to days, weeks and months, into rate they will be given in the question. And if in question they have given debtors turnover ratio, in that case 1 by DTR. Okay, fixed always variable and fixed. If the fixed cost is not given, you can go for variable, only variable also. This is incremental approach actually. This is like, see, simple annual sales will given, less fixed cost you have to do before, and incremental profit. This one if you do question only you will understand, nothing to teach. This one I have already taught you. And annual percentage of cost of discount. So this one, there is one question. Okay, there is one question related to bank, like ICI material ka last question. So let us say you will get 2%, 2 rupees ka discount, and out of 100. Okay, so you have to minus this also here into 365 if you pay this in 5 days into 100. So see, I'll tell you what this is. You'll get, so if the bank say we'll give you 2% wala interest, sorry, bank no, if the lender say we'll give you 2 rupees wala interest if you pay in 5 days. Got. So you are going to find out the effective rate. This is annual cost, like effective annual rate. So he says that if you pay in 5 days, you are going to get 2 rupees wala interest, right? So this is for 5 days. You are going to find out it for annual. Done, bro, done. And when it comes to factoring, there are two types. There is recourse, like bad debts is borne by the seller, and when it comes non-recourse, bad debts is borne by the factor itself. So he'll take higher commission for that. Evaluation of factoring proposal. Oh, we have studied this, but I'll teach you in my way. So simple, existing, without factoring, and factoring. When it comes to without factoring, now what? Just remember, first thing, bad debts. Okay, so in existing, without factoring, na, bad debts ka loss will be there, administration ka cost will be there. Okay, only these two. But when it comes to factoring, na, these two won't be there because he will bore, right? So he will bear, he will bear it. In that case, factoring commission will be like, let us assume he'll take 3 lakh and he'll ask interest also. Okay, so take total cost. So in this case, if I go for factoring, in that case 7,60,000 I have to pay. But if I am doing, in that case, bad debts also will be 7,20,000, and administration, like to call them out, it will be around 1,40,000. So this is loss for us. This is how to calculate commission and interest. So go for average debtors, that is like 30 days, and take reserve. Always it will be given in the question, it should be in per month. And commission also 1%. Like to teach with, I have to teach this in a question, bro, and I don't think I have time for that. So let us assume debtors is 30 lakh. In that you are going to reserve matlab the factorer one, factoring person, he'll reserve, and in that he'll take commission also 1%. 10% is reserve, 1% is his commission. So this is the what the total money. Okay, so average debtors, that is 360 into 30, 360 lakh. Okay, so coincidentally let us take 400 lakh into 30 divided by 360, that is some value, minus reserve, that is 10%, like this 30 ka 10% and iska 1%, so this comes 2670. And so isme you are going to minus the interest. So this interest is simple. So you are going to see, I'll tell you something. This is per annum basis and this is per month basis. Okay, and when it comes to interest, just take this amount. See this much he has to pay you now. This also he is paying you earlier, so he'll take 15% ka interest. Okay, like given in question, this into this divided by, like per month you are going to take. So 316, bro, done. In that case, the net advance he is going to pay you is 26,36,000. So the commission here, it is how much they have given, 30,000 and 3 lakh, right? So while writing in the question, just convert it into annual, like 3,60,000 and so this one, okay, done. This is in a good form, I mean savings. So if you go for opt factoring, so your administration call will be same, I mean calling illegal, your bad debts will be saved, and a saving of any other cost of debtors, if any. And what will be a cost, like annually you have to pay something, and the charges, any other. So there are two. First one is you have to pay commission and interest. Okay, so this annual charges is commission. And in case of advance factoring, now, so yeah, steps in case of advance factoring. So whatever average receivables will be there, minus factor reserve minus commission, you'll get something, is may have to minus interest. Array, this one I have thought you here itself. First average debtors will be there, ismail minus reserve and commission, you'll get amount. In that you are going to take it as interest, and it is called as net advance. So that is what they have taught you here. Okay, and this is like evaluation, like cost of factoring is these two things, and savings will be administration and bad debts. So effective cost is simple, amount of advance minus effective cost, done. This bank of interest, you used to go for last illustration or last question, I guess practice question, you'll understand this thoroughly. We are done with receivables and payables, and the last one here, it is treasury and cash. So here illustration 6 is very important, you have to go for that. And for measurement, go for cash budget first thing and take action on the basis of cash. So if budgeted cash is lesser than desired cash, that is deficit. Array, this one even kids know. Go for perform of cash budget. Here the opening balance you have to take, then collection, whatever collection you will take, only cash. Okay, cash sales, it may be cash from debtors and it can be from other receipts. And when it comes to payment, cash purchases, payment to creditors, wages or salary, overhead and rent, and other payments. So here now they'll do kind of thing, like they'll say 80% you are going to pay this month and 20% you are going to pay next month, and all. You just have to make a basic calculation there and go for it. First go for working note and then do. And arrangement of cash of investment, and in question they have, as I've told you, so they'll say if you have more than 2,000 now, invest it, and if you have less than 2,000 now, then borrow it from somewhere. So if you have less, then you have to arrange, and if you have more, then invest. It is minus, simple. And this is WJB, Justin Bieber. And this is optimal cash, so this is same thing, bro. Root of 2AO divided by C. A is your U, and leave. So U it is annual cash disbursement, and P, that is fixed cost per transaction. This will be given in the question, and S is opportunity cost of per 1 rupee. So this will be always given in the percentage, okay, like 0.8, 0.9 kind of thing. Done. This and all just for theory. Thank you. This is just what you can say, concept revision. Concept revision. Romit, I hope this is useful for you. If you get free time, watch this, and don't forget to subscribe, Romit. I mean, Romit is telling to Romit. Okay. Thank you.